What's going on, everybody? It's Jeff here. Welcome back to the channel. Kicking off the short trading week with more red. Investors are eyeing the interest rates very closely with the big question, how many times are they going to be raised this year? And also, is Jerome Powell just going to rip the Band-Aid off? He has continued to move up his timeline and surprise investors as of recently. So it is something they are looking at very closely. In this video, I want to talk about what is happening on an overall view of the entire markets and also about AMC. It is getting close to that gap from the end of May, which closes at about the 1650 level. And I want to talk a little bit about where I am standing currently in my position because a lot of people have been reaching out to me lately. I'll cover everything for you. Let's get right into it. First off, let's take a look at the NASDAQ, down almost 8.5% year to date in just over 2 weeks of trading. We are getting very close to that 10% correction territory. Naturally, the NASDAQ is compiled of your tech stocks and your high growth. Their valuations are based off of future revenue and also perceived value. This is the sector that gets hit the hardest, especially when interest rates start to rise and there's just any fear inside the market. You also have the treasury yields starting to rise, which is a signal that investors are starting to flee some of these speculative stocks and jumping over to the safer haven. Naturally, this works in rotations and eventually they will get their time back. I don't think the NASDAQ is done selling off as of yet. It will probably get some bounces just because today was a heavy red day. We might see a little bit of a bounce, but I don't think we are done selling off until we know how many times rates are going to be set to rise this year. But let's take a look now into AMC because I've had more people reaching out to me, especially as the price continues to decline. First of all, this is the gap I'm talking about. If you can zoom in a little bit here from the time of late May, it wants to close that gap. The charts at least are showing that at around that 1640, 1650 range. All right. The last time we saw even close to that $20 was mid-December when it bounced off very hard and went all the way back up to the $32 level where AMC was very comfortable. But I want to talk about something because this is very natural for us as humans. It's very natural, not only in the stock market, okay, in all of life, but specifically in the stock market for this scenario. It's always natural to look back and say two things: I should have and I could have. Okay. It's very natural when it comes to AMC thinking, oh, I could have done this at 60. I should have done this at 60 or 70. Okay. And the inverse effects goes to when, you're getting out of, let's say, you bought Tesla and you got out of it at $200, right? And now it's over 1,000. I could have, I should have. It's very natural. Okay. But I'm going to tell you one thing that I've learned, and especially looking at this with AMC, because my position, all right, it started off in late January, early February, buying in and immediately being red for a long time, averaging down a little bit and not getting out of the red really until, we had that little spike up, to 14 and got rejected, hung around 10 for a while, but until end of May. All right, we had that run up. Okay, I had options go, deep in the money. All right, they were up hundreds and hundreds of percents, even some of them over thousands percents. Okay, and continue to let them ride out. And after, at this point with AMC, my overall share position has gone red. All right, some of my options that I had for further out, your $80 strikes, your hundreds, I'd all the way up to 145s. Some of those expired worthless. Okay, I had some other options that naturally I had, your November, December, January, all the way back down to $14 I bought when it was at $10. Okay, they expired in the money and I was able to cash in just a little bit on those. But my point behind all of this is I have seen some serious gains go away. Okay, and I am red in my position. And it's very natural for us to have that feeling of I look back, I could have, I should have. Well, just remember two things going forward. One, the reason why we got into this play, everything still stands. Okay, so we're not wrong. All right, all of the DD, the research, the FTDs, okay, the abuse of the options chains, the synthetic shorts, none of that is wrong. Okay, just because the price hasn't moved to where we want it to be as of yet. All right, and don't forget where we want it to be varies person to person. Okay, that's the only part that hasn't been proven right as of yet. All right, the reason why we got into this play, we're correct on. We're not wrong on that. Okay, so you have to think of that going forward. Now, I understand a lot of people are red in their position. I get that. And some people are down much more than I am when it comes to a percentage amount. All right. Some people might be down, 50, 60, 70%, or let's say, 40, 50, 60%. If they did buy in anytime after that June run up in that time frame, they weren't able to average down. Okay. Or they bought before that and averaged up. That happens. I understand that. But one thing I've learned about the market is it might have some more room to go down naturally, but you never want to sell when the price just continues going down, 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 and you're at a point where you're already at almost lows. Okay, you got to think beaten down value before the theaters even reopened, before any debt was going to be paid off, before any management changes, financial changes were made. All right, it was hanging around that $10 to $14 level, and now we're sitting at 18 and change. It got down to 17 and change earlier today. You're so close to that base level, that rock bottom base level. In what I've learned from the past is you don't get out when you're at that bottom support after it's already fallen to a point. Okay, so just remember that going forward. I understand looking at the chart every single day cannot be easy. Okay, and I know some people might not have done something that I did where they put in a percent of their portfolio. They were continued to be able to day trade, add to their long positions, and have other plays. Some people did get into this before they found my channel, all right, and put in their entire 401ks and taken out second mortgages. I've heard a lot of things about this, and I understand that. And that's never easy for anybody. But just to understand exactly where I see us at is that two things. One, it's already come down a fair amount to where we are going to enter another demand zone for AMC stock. And then two, we're not wrong about this play. Some people have reached out to me, were we wrong? No, we're not wrong. All right, all the reason why we got into this has been proven pretty, correct. Okay, sure, there are still individuals and are still government officials that are trying to hide certain things under the radar, and that's natural. We knew that was going to happen. But the reason why we got into this is correct. The only thing that has been proven right as of yet is the price where we want this to go. All right, so guys, that's it for this video. I'll see you in the next one.